Hiring is not supposed to drain your profit, but most business owners are hiring backwards. They hire first and then are left wondering why their bank account is shrinking. I'm Abby Johnson, certified Profit First professional, and after working with service businesses in over 50 different industries, I have found 3 hiring rules that actually grow your profit instead of killing it. So if you're stuck doing everything yourself because you think that hiring is going to kill your margins, these 3 rules are going to change everything for you. So the first point I want to talk about is this saying you've probably heard: hire slow, fire fast. Now, I agree with this to a degree, but I want to go into this a little bit more because most people talk about this and they say, take your time, make sure you interview a lot of people, don't just hire the first person, do all these steps, and this can draw out your hiring process to a month. The thing is when people are looking for a job, they're usually looking for a job now. Either they lost their job or they really want to get into a better situation because they hate their current job or something like that. And if you don't give them a good offer, they're going to go somewhere else and take a better offer that is given to them sooner. I think for me, I'm going to change this slogan to hire intentionally, fire fast. I don't think you need to hire fast in terms of just taking any warm body off the street and putting them in the position. You need to be intentional with your hiring, because if you do that and you just hire the first person who falls into your lap, you're going to waste time and money and find out down the road that they weren't the right fit in the first place. So you need to be intentional with your hiring, and you need to do some extra steps besides just one interview. So here are a few things you can do to be a little more intentional in your hiring process. The first thing I like to do is add a screening video to any application. So if you put up a job on Indeed or something, you might get 50 applications. That is a lot to cull through to find the qualified people, and then from there decide who you want to interview. It can be an overwhelming job, especially for a busy business owner. So I like to add in a qualifier to the submission process where they have to submit a video. You just have them answer 3 simple questions: their name, why they think they're a good fit for the job, and then you ask them some sort of silly question like how to make a peanut butter and jelly sandwich, how to make a tuna sandwich, how to make a pizza, something like that. And this sounds silly, but first of all, this is going to weed down your 50 people to the people who are actually paying attention. And then this also skips that first interview process where sometimes they show up and you already know just from the first sentence out of their mouth that they are not a right fit for your business. So I had a client who was doing this, and she had one person who made the video and he edited it together. He made it really funny. He went in the kitchen with a chef's hat and showed you how to make a tuna fish sandwich. And that showed that the person actually really cared. He had personality, which was very important for this particular job because it was a client-facing job. That was someone that she was excited to interview. Now, another person submitted a video and said, "Hi, my name is Susan, and I think I'd be good for this job because I want to work and I don't know how to make a tuna fish sandwich." So that shows us a lot of things, right? That shows you right then and there that they probably don't have the bubbly personality that you need for this role. They also are not resourceful at all. I don't know how to make a tuna fish sandwich either because I don't eat tuna fish sandwiches. I don't know what's in them. Is it mayo? My husband uses mustard. Is that normal? I don't know. But if I was asked that question as part of a job interview process, I would Google it. I mean, how hard is it to Google and find out, right? So right then and there with this process, you're going to weed out people who don't respond in the first place, or you can already tell they aren't going to be a good fit. And then from there, I would formally interview them and give them a working interview, have them do some tasks. I've had a client recently who is a mechanic, and he's had a few technicians come into interviews and say, "Oh yeah, I'm the best around. I'm the best in my company. I know how to do do anything. I'm worth X amount of dollars, and think they are these big shots. And then he hired them and came to find out that they actually were very inefficient. They were slow. They didn't know how to do things they said they could do. So give somebody a quick little test, have them go do some tasks and see if they can actually do what they say they're doing. This is a way to hire fast, but you are still hiring for quality and you are intentional behind that hire. You're going to be able to see someone's willingness and their attitude, which is actually a lot more important than just their qualifications on a piece of paper. So that is how you hire intentionally. And then the other part of that is to fire fast. I have seen so much wasted money from people waiting to fire. You know this person isn't a good fit, they're slow, they aren't productive, they've got a bad attitude, whatever it is, but you are too scared to go through the hiring process again, so you hang on to them. But the thing is that bad hire is costing you their salary, but usually they are pulling the revenue down as well. That could be because of their inefficiencies. That could be because of their laziness or poor attitude is rubbing off on the whole team. Either way, you are losing more money from this bad hire than if they just weren't there at all. So the hiring process itself is a big area people lose money, either because they don't fire fast and they hold on to someone for too long who shouldn't be there, or they take way too long to hire, they hem and haw, and that good person has moved on, or they don't have time to go through the resumes, so they miss out on good people there. So hire intentionally and fire fast. If you're realizing you've been thinking about hiring all wrong, you're going to love what comes next. But if you feel like you need help implementing these rules, click below and book a call with my team right now. We'll do a full business audit, find your top profit leaks and team leaks, and set you up with a plan on exactly how to solve them. All right, so the next hiring rule is profit first, then payroll. So a lot of people don't hire because they don't feel they can afford to hire someone, and that is very valid. I don't want you to hire when you can't afford them. But how do you even know if you can't afford them? That's the biggest question, right? And the way we do this is by actually setting aside the money ahead of time. Test yourself and test your bank accounts to know whether you can actually afford this hire. So how do we do this? How do we actually put this into motion? The first thing we need to do is figure out the true employee costs. So a lot of times when someone's thinking of hiring an employee, they're just thinking of the salary. So let's say this potential employee is going to cost you $6,000 per month. Now, there are more costs for you than just their salary. The next is the payroll taxes. This usually averages between 9 and 11% of their salary. So let's just go in the middle and for easy purposes, just say 10%, $600 a month. The next thing you have to think about is any benefits that are being offered. Let's say you're doing some sort of 401k match or health insurance or something like that. Now, this can vary wildly. I have no idea what is appropriate here because it's going to depend on your plan and your structure, and there's a million different ways to do it. So let's just say for, again, easy purposes that's going to be $300 a month for health insurance or something. Another thing to think with is any tech that you're going to need for this person. So are you a tech heavy business where they're going to have software subscriptions or something like that? Let's say for you, this equates to $400 a month in different users that are needed, different subscriptions that are needed. So that's actually $7,300 a month that employee is going to cost you, not $6,000 a month. Now, hiring someone should make you more money, right? You should see a return on that hire, but there's always a ramp up period. You probably are not going to see the monetary return on their efforts for some time, depending on the role. This does apply to administrative roles as well, even some sort of back office administrator, bookkeeper, payroll person, whatever it is, they are going to make a return for you in some sense in terms of saving time, catching mistakes, catching lost revenue or overpayment or whatever it may be, right? But they might not be doing that from day one. So if they are saving you time or money in that sense, then they are paying for their salary. They should be overpaying for their salary. Since that's not happening from day one, and you need to know if you can actually afford that $7,300 a month, you can test yourself by actually setting this money aside ahead of time. So here at Matterhorn, one of the things we do is we set up our clients with the Profit First system. I have many other videos detailing this, but the basic idea is that you have different bank accounts for different purposes. All of the money that comes into the business first goes to an income account. This money then gets allocated through these different accounts that I'll go over really quickly. It goes profit, a specific profit bank account, owner's compensation account, a tax account, an operating expense account. Now, with operating expenses, you can break this out into more bank accounts from there. And while that may sound complicated, it's really not. It actually gives you more clarity. So what I love to do for new hires or preparing for a new hire is to make a separate account for that. So let's call that the hiring account. Some people also have specific payroll accounts. I love that because payroll is such a big expense. It's nice to have that segmented off. If you already have a payroll account, you can use that account, but I do really love having this specific hiring account. So you're going to see exactly if you can hire that person. So as I said, money funnels into each account, right? And you put a percentage on all of these accounts. That's part of what we help you do here at Matterhorn. Let's just say we're doing 10%, 10%, 15%, and then OpEx is 65%. And let's say you're already at these percentages, right? Now, the great thing with Profit First is if you've been implementing it, you might already be at these ideal percentages. And then you've got some room to play and shift those percentages around. So there's a couple ways you can do this, but basically you need to pick a percentage to be putting into that account. Now, if you're not ready for this hire yet, but you know it's coming down the road, you can throw a couple percent into that account. Take it away from operating expenses. So let's say that OpEx is now 63% and you're putting 2% into a hiring account. Maybe you don't even know what position you're hiring for, but you know that you're building up some funds there in order to pay for someone a few months down the road that you know you're going to need. If you have a specific goal in mind, like the $7,300 example, then you can figure out, well, what percentage of my monthly income is that? For example, if you're doing $200K a month in revenue, $7,300 is about 3.5%. So you could start putting 3 or 4% into this hiring account. So what's going to happen is that account is going to build up. And then at the end of the month, you can see, yes, we were able to set aside over $7,300 and still be able to pay all of our other bills. Or you can see, wow, we weren't able to do that, which is okay. But now you've got some set aside. You can set aside the next month. So basically, this is going to tell you what you can afford. Your bank account is going to tell you this. Now, of course, you can go into QuickBooks and pull your P&L and your balance sheet and your cash flow statement and all this. But do you want to do that? Do you know how to do that? Do you want to wait for your accountant to do that for you? No, this is an easy way that you can do this and you can clearly see for yourself what you can or can't afford. The third thing that you need to have in place are the right systems that are actually going to help someone succeed in that role. You could hire a rock star, someone that has everything you want, the attitude, the willingness, the skills. But if you don't have a system for them to follow and you just throw them in the fire, now some people might figure it out, but most of the time they're gonna flail because you're flailing. So ideally you have systems ahead of time before you even hire someone. I think where some people do fail though is they spend too long trying to establish systems and then everything breaks because they don't hire when they actually need to. So I don't want this system step to hold you up or make you feel like you can't hire, but you can actually record systems while onboarding someone. And that's my favorite method of training because it actually saves time for you. So what I want you to do the next time you hire someone and you're training them, go through the systems with them and document them as you're training them. So maybe you're showing them how to do something on the computer. Great, record the screen share while they're sitting right next to you. And now you have it documented for that next hire. And you may even be thinking, well, I don't have any systems, But the thing is you most likely do. They're just not written down. They're in your head or in Susan's head over there or wherever, right? They just aren't on paper or on a document. So this really doesn't need to be complicated. Next time you go to do something, just record yourself doing it. And then you're able to hand that over and actually document the step-by-step of how you do something. Then once you have some basic checklists, some basic step-by-steps of how to do something, it's really easy to set your expectations. Hey, I just hired you for this role and I expect you to do XYZ in this amount of time. Or in your 40-hour work week, you should be able to do all of these things. You are setting expectations because you know what is realistic. This is a big disconnect that can happen sometimes where someone is hired for a role, expectations aren't properly set, and then they're let go because they aren't supported or even informed in what they should be accomplishing. So if you've got some basic metrics on your expectations, then you're also able to easily monitor if someone is catching on to the job or if they're just falling down. Maybe you spend some extra time training, you've done everything you could to try to build them up and support them, but they're still not right for the role. Then you can fire them faster. That's part of the fire fast and rule number 1, right? So this is how you can determine, can they follow your system? If you have the systems and metrics in place, it's a lot easy to tell, is the human portion of this working or not working? And you can let them go faster if they need to be let go. Look, hiring isn't supposed to drain your profit. It's supposed to multiply it. When you follow these 3 hiring rules, you end up with team members who actually make you money instead of costing you money. So if you're tired of doing everything yourself because you've been too afraid to hire or too afraid to delegate, click the link below and book a call with my team now. We will do our free profit assessment, which is a full business audit. We'll find your top leaks and you'll walk away with an action plan. And if you want to see the top 5 hidden profit leaks in your business, make sure you check out this video next.